Thank you, Hari.
Much.
Good morning, everyone. This is really exciting. I welcome all of you to the celebration of a decade of impact investing. A big thanks to Financial Times and Ford Foundation for bringing all of us together to celebrate this wonderful occasion where two disciplines, finance and development, which for decades really didn't see eye to eye, but now is working hand in hand. So it's a wonderful, wonderful day, wonderful celebration, and thank you all for being here. Now, I have to give my recognition to the Rockefeller Foundation, who 10 years ago, from the ashes of the 2008 financial crisis, coined the term impact investing. Now, of course, many of us in this room have been doing a lot of this work already, be it in the microfinance space, be it in the community development banks in the US, or even in the social entrepreneurship space. But it really was Rockefeller who came in and said, how do we put all of that under the umbrella of a term which actually brings in the financial sectors and actually brings in the capital markets, which can unlock that $70 trillion, which is under management. Now, 10 years has passed, and we have achieved a lot. In 10 years, we have now unlocked close to $500 billion in impact investing. We've been able to measure and see the value in social impact, and also really make the attempt to meet the SDG goals, which is fantastic. And most importantly, we have been able to create at least the beginnings of an ecosystem where the public sector, the private sector, and the philanthropy sector is now coming together hand in hand. And this collaboration is very effectively advancing knowledge, building the nuts and bolts of what needs to happen in this infrastructure, and really being able to mobilize capital. And who's doing it? All of you in this room. So a massive salute and congratulations to all of you, because you are taking those fantastic steps, bold ones, to really make this space come together. Now, given that we are in Asia and a big focus of impact investing, at least the growth of it in the last 10 years has been here, let's spend a few seconds to see what has happened. Now, as you can see from this chart, this is from Jin, there has been incredible amount of initiative and work that has happened. Now, one of the reasons also being is Asia has now massive amount of wealth, and we all know that. We have 5.5 million millionaires. That's a big number. And 600 billionaires. But at the same time, Asia still has a large portion of the 700 million people who are still living under $1.90 a day. So if we are going to actually address this, we need to somehow bring these two groups a little closer together. And that's where impact investing comes in. And from the numbers, it looks like we will be able to unlock over $100 billion over the next few years, which is very encouraging. Now, along with the anniversary of impact investing, it's also IIX, the company that I founded 10 years ago. It is our 10th anniversary. So it's very exciting for me to be here and celebrating that with you. 10 years ago, at the Bellagio Center for Rockefeller Foundation, IIX was born, and we have been able to be the pioneer and had the privilege of really carving the space for impact investing in Asia and Pacific. We have been a lot of the first. We created the world's first social stock exchange. We created the first equity crowdfunding platform for this space, which has now unlocked over $100 million. We have been able to create financial products where we put women front and center. In 700 years of capital markets, women have never been put in capital markets. That is a big flaw, and we address that. And we have been able to develop effective measures for impact, which has been able to connect all the investment that happens through us and also the enterprises who are doing the work. Now, I always say a big part of our success really has been the fact we just happen to be in Asia. And it is an amazing, amazing thriving market. If you look at Indonesia, which has over 300,000 social enterprises, we do a lot of work there. We also see now that the government is stepping up. They're actually now, Bappenas now has an initiative to use innovative finance to actually meet the Sustainable Development Goals. There is India, who has been a leader in the whole impact investing space with over $5.5 billion that has come in through the diaspora and the DFIs. There's Philippines, who always is in the forefront of social change, and now there are over 165,000 social enterprises in the Philippines in various stages and moving through the value chain of capital markets. IX is in Singapore, where I come from now, and in Singapore, we have been able to create a hub for all this activity. And the reason why is Singapore has surpassed Switzerland in amount of private wealth that's residing there. And Singapore authorities, the Monetary Authority of Singapore and the banks and the law firms, they're all coming in to figure out how the financial markets can play a role in this space. And there is, of course, Hong Kong, which, as always, is a leader and an inspiration to all of us with all the social movement that has happened, and many of you in this room who has been a leader in the impact investing space from the investor side. Now, while all this has happened, we have to kind of pause and say, this is sort of the initiatives of the last 10 years, and frankly, where are we today? And when I was actually preparing the speech, I really had to have a very deep thought, because the reality is we are at a juncture where there's tension. There's tension because we all want to do good, and we all want to do good in our own way. So we have the INGOs jumping in, we have the multilaterals, we have the UN bodies, we have the large private equity firms. They're all coming into the space, into the sandbox, which is brilliant. But also at the same time, it is creating tension. And the reason why is because we are all trying to do things perhaps we are not that familiar with. If you are a private equity fund, it's not about how big the number is. I mean, it seems like almost a competition now. I have a $2 billion, I have a $3 billion, I have a $4 billion fund. But the reality is, are you just looking at emerging market investment and calling it impact investment? Or are you actually looking at the last mile and making sure that the underserved communities are actually benefiting from your investment? If you are an UN organization or an INGO, are you focusing on your strength on the advocacy and the policy work that's so needed? Or are you wasting your time in trying to be an impact investor? And if you are a donor organization, are you using your capital to actually catalyze and leverage the investment that needs to happen and equip the multilaterals who you give money to actually take on risk so they're not going head to head with the commercial investments? And we need to ask all of this. We need to be able to innovate in our own realms, and we need to all wear the badge of ethics in both personal and professional conduct. And with all of this, we need to embrace a four-letter word, which is risk. We need to be able to embrace risk and make risk an essential part of how we are doing work. We need to ask ourselves, are we willing to take the risk of innovation when everyone else laughs at you? Are you willing to take a risk of giving the voice to the voiceless, even if everyone says, what does that mean even? Are you willing to take the risk of valuing people and planet when, again, you may be seen as someone as a maverick? Well, at IX, I think one thing we did over the last 10 years is we didn't run after creating a fund. We didn't run after doing the usual. We took a lot of risk. And why? It's very personal. I'm from Bangladesh, and I wouldn't be here today if I didn't take risk. And for me, it really was doing things like putting women and valuing women and putting them front and center of capital markets, creating Women's Livelihood Bond, which is a traditional bond with a lot of interesting nuances to it, and which gave a coupon of 5.65% to the investors. and actually brought in 385,000 women into the capital markets. Similarly, now we're doing Women's Livelihood Bond 2, which is a $100 million bond, and which is going to be going out in the market in June. Now, if you're talking about risk, we're willing to take even more risk. We're now creating a fund, a $100 million fund, to really come into these bonds on the first layer of equity, because that's what's needed. And when we did the numbers, we saw a $100 million fund, which will create the liquidity, create the first layer of investment, plus be able to warehouse through it, will actually unlock $1 billion worth of capital, which will put, again, women in capital markets. And all this is possible because we are very true to measuring the impact, making it front and center, and being able to actually look at what it means to have risk, return, and the impact, and the correlation of these three. And today we're able to actually use all this, and now we are using a technology-based, data science-driven tool, which is actually allowing us to now connect that to the financial markets. And we're doing that now in the US, where we're creating a women's health bond, as well as a women's health mutual fund and ETF, which will bring the voice of the women real time with the financial markets. Now, all this is exciting and with a lot of opportunities, but I think for us, all of us as a group, we need to now say, where are we going to be going for the next decades? Are we actually developing the innovative products to unlock large-scale capital? Are we giving a voice to the people who don't have it? And actually, are we looking on tackling this social construct, yes, social construct of risk, and really look at it differently and be able to make it very much a part of the conversation as we scale the impact investing space? So, it's not easy. Listen, I mean, for 10 years, we've been doing it. It's not easy, but it has to be done. And my request to you, to all of you in this room, is as the day progresses and as you go back to your jobs, please do remember that all of us have the courage to innovate and take risk. All of us have the defiance to actually see how we can value women, the disadvantaged communities, and the planet. And we have the optimism to connect the underserved communities from the back street to the Wall Streets of the world. Thank you very much.
So inspiring.
Oh, thank you.
Thank you so much. Last year, I think we all left the room feeling very good, but I thought that we didn't have enough sort of a discipline discussion and a very granular discussion. So I want to drill down more this year, because we talk about ESG in a big sort of overreaching kind of way. And yet, it's a huge umbrella. There are a multiplicity of priorities within it. You decided to make women your priority for a number of really worthwhile reasons. But let's talk first about, you raise this capital through a bond, then what happens? Take us through
Right.
what happens with the proceeds?
Right. So I think it's actually, I have to kind of start from the bond is actually just the last step. So what we saw with our equity crowdfunding platform, which has now been working for the last 8 years, is these entities, now we have raised capital for close to 50 of them, they keep on coming back to us.
And who are these entities?
So these are entities who are in the sector of agriculture, in clean energy, in health, education, and a lot of them run by women, and a lot of them actually working with women. And we saw that there was a flaw in the market if they kept on coming back to us to raise capital. So I said, well, it's because they really can't access the capital markets by themselves. So it really started from that problem. And I said, how about they can't ever go on their own? So we pulled together a group of them and then also use the microfinance institutions, which are the second, third tier microfinance institutions, which cannot, again, go to the market by themselves. We pool them together. So it's a predetermined portfolio of organizations. We pool them together, create a structure, and then put that out in the market. So it's not a fund where you're raising the money and disperse it. Already the group has been identified, and the group has been determined, and what the work is going to be done. And that group, as a unit, is the one that is out there, through this bond. And for us, of course, the theme always has been for women's. In this case, this group of entities have to be focusing on creating livelihood for women. So that's our big focus. And the next one is going to be on climate, women's climate bond, and we have women's health bond. So again, with the big focus and really bringing in products, we're putting women front and center.
And from a geographic point of view, is most of the money going to these groups specifically in emerging Asia?
Yes. So with our the Women's Livelihood Bond, the first one, what was really interesting about it was the first bond, even in capital markets in Asia, which was a multi-country. So it actually was, we had an entity from Vietnam, from Philippines, and Cambodia, and we pulled them together. And also you have to understand, for us, that was also very important because we have learned through our equity crowdfunding the investor behavior, which is if it's an investor, say, from Singapore, who is a fourth generation Indian, they'll still want to invest in India. So we said, okay, we need to kind of break this. And the way to break it is we start pulling countries together and really make people focus on the product. So in this case, it was a multi-country, multi-regulation. It was incredibly difficult. It took us 2 years. And I have to really, again, acknowledge it was Rockefeller Foundation who came in and gave us initial funding to structure it. And it has really been remarkable because we managed to do it because we had a lot of partners who came in, and I have to do a shout out to the law firms because they really get a bad rap, but law firms are amazing because we had Sherman and Sterling and Latham and Watkin all work pro bono on this, and it has been quite remarkable. So it really is a very different way of thinking about what's the problem, and then how do we solve it, by creating a financial product instead of the other way around. Oh, I'm going to create a financial product and then see what I can do with it.
That's great. You kept talking about risk and taking risk, and yet it seems to me the greater risk is not doing anything and sort of burying your head in the sand. But in order for that to be true, you had talked about measuring the impact. Mm-hmm. So one of the ways to think about how this isn't all that risky is to say we can demonstrate the impact. Mm-hmm. So how exactly do you measure the impact? Because this is, it seems to me, one of the big challenges if we all are to agree that the biggest risk is not to do anything.
So I think, so there are two parts to that question. I think the first, you're absolutely right. I think in measuring the risk, and I'll spend a few minutes talking about that, but also there is, as I said in my talk, there is definitely a correlation where you have more impact happening, your risk goes down. And we have the numbers now to prove it, and we show it to the investors. Now, in terms of measuring risk, this was my research when I was a professor at the National University of Singapore. And what we really looked at was what's the impact? What is impact? It really is the change, the delta, right, in what you have now and what you will have. Because of the capital. So what we actually did is look at this delta vis-a-vis all the stakeholders and look at the primary, secondary, and tertiary impact and create indicators. And this was actually the beginning of IRIS. So I was part of the team that created IRIS for Global Impact Investing Network. And what we then do is give a financial proxy to that and make it go hand in hand. For those of you who are familiar, obviously, with the financial markets, if you do a discounted cash flow, this is exactly that, where we say the $100 that's going to come in investment, what's the impact that's going to happen looking forward, vis-a-vis each one of these stakeholders and each layer of impact. And it is very interesting. We have a massive spreadsheet like you will have with the DCFs. We discount it back based on, again, the same kind of risk that you have on your DCF. And we have one number, which is the social return on investment. And it's very, very interesting because we have seen with investors, they really like it. They like the fact that you can actually equate something which is going hand in hand with the financial return and going hand in hand with the social return that you're having. And they can actually see that this actually makes sense vis-a-vis their investment. So it's a wonderful thing.
Our time is almost up. I'm just going to go over for one moment to ask you this final question,
Sure.
Very briefly. We had talked about first loss portions of these things and what a challenge that is, and who takes that first initial risk. Do you think that investors are wrong to be so obsessed with how do we de-risk? We don't want the first loss. Do we need to just
so I think I have to kind of say a little personal story. So when we did the Women's Livelihood Bond 1, which again, the entire time everyone said we were insane, except for Rockefeller. It took us 2 years. And once we went to the market, we had this guarantee from the US government, 50% pari passu. We couldn't sell it. And the bankers who were helping us to sell in the public market came back and said, Durreen, just drop the women. Honestly, we have done the market research. If you drop women and just call it a high yield bond, it's going to sell. And I said, absolutely not, right?
It's so ironic because if you look at microfinance, women are much better at paying back.
But you see, this is the thing though. I'm glad you pointed it out. People see as microfinance that's happening somewhere there, okay? And these women with a cow who will never come to my house, okay? I was creating a product where I'm coming to your house. Okay, so that is the difference. And what I did was basically my husband and I, we said, okay, you know what? This is our moment and we have to do it. We put in our entire savings as a first loss. And we did it, and it oversold. Now, what's very interesting, the reason now we're creating the Women's Catalyst Fund is because we see in the market they still need this, right? And when we did the plan for the next 10 years, the whole plan is actually reducing it over time and seeing, being able to actually get, because we'll have enough data to show that how these are performing, and being able to actually show that you will not need this de-risking perhaps in 10 years' time.
Inshallah.
Inshallah.
Thank you so much.
Thank you. Thank you very much. Yes, absolutely. Thank you.
And now I would like to invite the first panel up to the stage. Please join me. Michael, Roy, Lorenzo, Helene. No, whichever way. I always like to.